Mortgage rates remain flat. That's what this whole article is about right here. It's from Realty Times. Freddie Mac today released results of its primary mortgage market survey showing 30-year rate mortgage FRM averaged 6.76. You probably noticed that the house next door that's for sale has been on market for quite some time, right? People are fatigued at 7%. We're just not going to have a ton of buyers at 7%. It's normal, right? News facts, 30-year FRM 7.76. The 15-year is 5.89, and the PMMS, which is primary mortgage, blah, 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 focuses conventional conforming, fully amortizing home purchase loans for borrowers who put 20% down and have excellent credit. Now, your house isn't selling. Why is that? Typically it's overpriced, or the condition or isn't commanding the price that you think your house is worth. Simply said, in certain areas, we're in a contraction. We have a surplus of inventory. I wouldn't say it's a huge glut, but we're also holding on to pricing that is not attracting buyers. I have 3 houses on this street that are for sale and they haven't sold. Now, my listing across the street is only a week old, right? We had a pretty busy weekend for open houses. I've had one showing since then. And that's showing that the market is a little dry. As a buyer, you're not just looking at that block or that same model. It's the same model, the same floor plan. You're looking at that house right now versus the house in 95120 or 95119 or 95136. You're looking at 30, 40 different houses right now and honing down to 5 to 10 houses to go look at. If that house condition, price, and location match what you're looking for, you're going to move on to the other one of 30 houses to look at, period. It's a housing strategy. It's a pricing strategy, right? Now, price being so high, the mortgage rates being so high, and I say high because they've remained pretty high over the last couple of years. Since 2022, we've seen an increase of interest rates. Once you see this number go to 6.5%, 6%, you will see buyers enter the market. We'll see more buyers enter the market. Now, a $2 million house, which is the average price, it's the median price in Santa Clara County, you need $400,000 down. And if you have good credit, you're looking at 6% interest rate with 1% down. That looks like it's 2%. Fees and points, 0.75%, right? You can buy it down to that. If you're a seller and you're smart, you're going to say, let's take that offer and work with it. Let's give them some points to the loan. It's not $2 million. It's really 1.8. So it's $18,000 times 2. That's money you're losing every day if your house doesn't sell. You can credit the buyer to points towards lowering the rate. You can do that. That means you're paying under 5% or under 6% for that buyer. That's going to go a whole lot of way to get that house sold. If you lower the price, that's one thing, but if you ask for concessions, that's another way to get buyers to enter the market, right? We just have to work with the right buyer to find that. June 15th, and around that time frame, June 16th, the Fed is going to testify again and talk about lowering rates. And we're hoping that it's going to be 0.5%. But more than likely, it'll be 0.25%, which means that we're still going to be stuck at picky buyers, larger inventory, and contracting prices, which might be part of what we need for an economy. But as a seller, it sucks, right? I have a house coming up. I just got this listing today, this week. I've been working on it, and I brought in my contractors, still waiting for pricing. I have a new company that will take your house and update it as much as you want or need. If it's simple repairs to complete remodel, we can get it more attractive for you, and you don't have to pay them until you close escrow. So if you borrow $30,000 or $2 million, they hold it and charge you a little bit more. They're a business, that's what they do, and they're a general contractor, and they bring in their contractors and they fix your house. This house that I'm working on needs new floors, new paint, new fence, new landscaping, and still it's not brand new. We're not flipping this to be a brand new house. We're not putting new kitchen and new bathrooms, etc. We're just fixing it up, and we're looking at $30,000 or so to fix it up because it costs money to make money, right? It just does. I have another house where we didn't put a dime into it, moved furniture around, and that's it. And it's just sitting there. So what do buyers want? I'm willing to put some sweat equity into it, or do you want the family that's coming in and doesn't want to do anything? They just want to move in, not have to fix anything, not have to repair anything. So it depends on where you are. And with that, you have to set up your pricing expectations. So this is what you get for $2 million. This is a sample of 60 houses that are priced around the $2 million range. Los Cerritos in 95120. It's not my listing. $2 million, 3-bedroom, 2-bath, 1,300 square feet, built in 1975. It's been on market 38 days. Look at it. Here you go. That's where it is in Almaden Valley. And let's take a quick look at the pictures. Standard ranch house, kind of updated, nice looking. Looks like they have newer floors. I like the wood floors. See, I'm engineered wood or real wood. Talked to the guy yesterday from this company. He's like, oh, we have to do LVP. I'm like, not a big LVP guy. This is a little old looking, I got to tell you. Dark wood, unless it's a huge house, is going to make the house look small. So just be careful about that. My house is huge for the area. It's not a multi-million-dollar house, but it's a huge house. I can get away with putting dark wood in. This is a smaller house. This is 1,375 square feet. It's small. I would have gone with a lighter wood floor and lighter wood cabinets, but that's the look and feel that they have. And they updated it and they have a nice little gas barbecue area. I would have liked a pergola. The difference between a pergola and a gazebo is enclosed or can be closed. You can have shutters or walls or windows, and a pergola is completely open air. So large side yard, which is nice. This is just like my house. You have one side yard, and then the other side is your neighbor's wall, and that's also your property line. It's called a zero lot line. I like that because you have a bigger side yard. You can do storage, you can do playground. I had a playground, cement down so my kids could run around their little scooters when they were young. So this is a nice house, and it's priced probably a little high. If it's on market 38 days, has there been a price correction? Yeah, this one started at 2.1 and now it's down to 2. So there you go. What do you get for $1 million? This is 95123 on Belden Drive, $1 million, 3-bedroom, 2-bath, 1,800 square feet. Get a whole value for a home in Blossom Valley versus Almaden by $1 million, and it's right here. So it's on the north side of 85 and it's been on market 6 days. I think this one's priced just right. Thank you for doing a floor plan. I have to have a floor plan on my listing there. They're smart. They're going to have a lot of people flocking to that house and decide yes or no. And then you'll have a majority of those people say, yes, let's try to put an offer on this one, even though it needs a backyard, even though, the paint is dated or personalized. This one's going to sell pretty quick. It's 6 days on market. I think you'll see this thing going into contract in the next couple days. So there you go. That's what you get for $1 million. It's crazy to think $1 million here versus $1 million in St. Louis is completely different, right? This in St. Louis would probably be $150,000 to $200,000. In Austin would probably be like $300,000-400,000, maybe $500,000. Prices have increased. Prices are contracting there too, right? So bottom line is that's where we are. Our pricing, our interest rate fatigue, fact that buyers are being picky. We're seeing the market slow down considerably, but we're not in a recession yet, or we're not seeing massive contraction yet. We're still seeing houses sell on average for 7% over list price. In Santa Clara County, we're still seeing 6%. What does that mean to you? Price it right. Don't get greedy. Attract buyers. Don't think that your list price is going to say anything about what the final price is. Your job is to trust the agent and